Now, the analysts at Bloomberg Intelligence have compiled their list of 50 companies to watch in 2022. They range from those such as Volkswagen and NIO that are pushing the transition to green technology to Pfizer, Airbnb, and Chinese hotel chain Huazhu, which are playing on the recovery from the pandemic. Well, to tell us more about their picks and why these companies were chosen, I'm joined by Tim Craighead, Director of Research at European Strategist at Bloomberg Intelligence. And then to talk about the read across for some of the sectors, Baweja, Chief Strategist at UBS Investment Bank, is also still with us. So thank you both for either joining us or sticking around. Tim, first of all, we looked at the list. It's a fantastic list. Some names that are very intuitive. I'm thinking of, FedEx just because we ship so much, or Netflix because we watch so much TV. Hopefully you're watching Bloomberg. But then there's, others that are less counterintuitive. So what surprised you the most in putting this list together? Yeah,
so I think there's a host of themes that you've mentioned that feed underneath of this. And I think some of these really stand out. You mentioned briefly Volkswagen a second ago. A lot of people think that's old school. That's just an old-fashioned auto, and it's the world of Tesla. Well, this is the year that we think Tesla may be dethroned. It's not on the list, but Volkswagen is. And simply the reason is we think this is the year that Volkswagen may, in fact, lead Tesla from the standpoint of production. And then you throw in the idea of an IPO with Porsche that's getting super electric-oriented. It's a new story.
Yeah, and Bhanu, I guess that goes to 2 points. First of all, it may be more difficult to make money in 2022 and 2021, which is why in certain cases you have to stock pick. But also, if you consider some of the themes, it's growth prospects, it's the impact of COVID, electric vehicles, greening the economy, but then, power shortages, opportunities in the metaverse. So what are the kind of three key themes that you think have been unloved that we should be focused on this year, Bhanu?
Well, I do think that we need to think about the yield curve steepening. I mean, there's been a massive flattening here. I think the yield curve can steepen out here. And as a result of that, I think financials can do quite well. So to me, the terminal rates are extremely low. They're mispriced. There's a lot of pricing for the Fed in the very front end first 2 years, but the terminal rate remains very low. So as that adjusts higher, not just in the US, but also in the UK. And, this year, for instance, real rates have risen more in the UK, but also in Europe in general. I think you will see financials do quite well. So I think that's one theme we really like. And then we want to come back into tech. Right now we have a tactical underweight in tech just because I think the reflation theme is so strong, but we want to come back into hardware. We want to come back into software services and semiconductors. And I think this theme is going to be with us forever because we do find that intellectual property investment is rising quite aggressively relative to overall investment. And I think this is going to mean that we use more and more of tech. So we're certainly not in the camp that believes that the higher real rates are going to mean that we see a sort of a collapse in the NASDAQ at all. I think NASDAQ vol relative to S&P vol has picked up, and I think that will continue to rise for the near term, but we're looking for an entry point back into tech.
Yeah, and I want to ask you both also about China. So, Tim, when you compile the list, how much focus did you do on China in terms of either companies that can benefit or be hurt by the regulatory prowess that we're seeing out of China?
Yeah, so I guess a couple of things come to mind with that, Francine. One is with what's going on from a Chinese policy perspective, specifically if you think the current situation with Omicron, that is an outstanding risk globally. That's a zero COVID policy regime. And if you see Omicron ramp, you've got the risk of a shutdown for all practical purposes. We do think, however, they're very focused on increasing production, driving growth. Even in the shutdowns we've had so far, production is okay. Consumption is what's been hit. So we're not too fussed about another supply chain shock coming from China from a top-down perspective. And bottom up, we think that there is more stimulus coming through. China has changed its tone, and we do think that there are recovery plays in China to take advantage of. Huazhu, you mentioned, is an interesting one. Evergrande could be flipping the other way in 2022. It's on the list.
What's your take, Bhanu, on China? I know you were also a great expert of emerging markets. You're known for many years to have had some great calls. Are we underestimating the slowing down that we could see actually from the Chinese economy this year?
I think the world is underestimating that because the Chinese economic slowdown is with us, but the contagion from China to the rest of the world doesn't exist. I mean, you look at material stocks, you look at European luxury, you look at banks, CDS, or emerging markets credit. There really isn't any sign, so that could be a blind spot for the market. But within China, equities have corrected a lot. So rather than looking for much more easing, monetary easing, which I don't think we're going to get in China, we're going to get very modest easing. I think we would look for places that would benefit if their regulatory framework stabilizes. I don't think it's going to ease, but stabilizes. So internet stocks in China, we think we are getting back into at these levels. We're overweight Chinese equities as a result.
Okay, Tim, this is also a fun list because I feel like, I read through the whole list and about 45 companies I'm absolutely addicted to. One is Freshpet. Now, the rise of pets in the pandemic has been absolutely incredible. And talk to me about how this, is here to stay and actually can you make real money in pet food?
Well,
I mean, I spend real money, so probably as an investor,
believe me, and hand is up. We have pandemic puppies, so
join the club.
We were going to get one, and we got two, so we now have 3 dogs. So Freshpet is a U.S.-based idea on fresh pet food that is sustainable, and they ship direct. It's better for you, etc. And the whole idea about humanization of pets and the whole mindset change is changing the dynamic. And the quick and dirty on Freshpets in terms of why it's on the list is they've got a huge expansion in capacity coming that we think will be able to ramp revenue and drive earnings to exceed expectation.